Summary Global Market Dashboard provides a snapshot of market data, showing percentage changes across various metrics, ML, SM, CS, P/120, P/60, P/20, 1 diff, for numerous financial instruments. These include various ETFs tracking different market sectors, for example, 50 ETF, government bonds, and individual stocks. Data also includes volatility, HV, and a price signal code. Finally, the data encompasses both global indices, for example, and commodity futures, for example.
Hey everyone, and welcome back for another deep dive. Today we are looking at global market trends.
Ooh, exciting.
It is exciting. We're going to be looking specifically at what happened on December 5th, 2024.
Okay.
And all of our data is coming from Global Market Dashboard.
Sounds pretty comprehensive.
It is. They give us a ton of data.
Yeah.
So our goal is to really kind of sift through it and find the stuff that's going to be most relevant for you.
All right. Sounds good.
So the first thing that jumped out at me is that the Chinese markets are
going crazy.
Yeah, they're on fire. We're not just talking a little bit either.
Really?
Yeah, multiple sectors are showing some pretty impressive gains.
Interesting. What kind of gains are we talking about?
Well,
specifically?
Yeah, so like Chinese ETFs are doing really well, like the Chinex ETF, which is focused on like those up and coming industries.
Right.
Up 19.5% over the last 120 days.
Wow, that's impressive.
And then get this, the CSI 2000.
Okay.
That's tracking a broader range of smaller companies.
Oh.
That one is even higher, 24.8% over the same period.
So those smaller companies are really outperforming the larger ones.
Yeah. And, you know, a lot of the signal codes on these Chinese indices are showing as bullish.
Okay. So what do you think is driving this growth spurt? I mean, is there anything specific that we can point to?
Well, it's probably a mix of different factors.
Yeah.
You know, the government policies are definitely playing a role.
Sure.
We're also seeing some signs of, you know, a pretty solid economic recovery in a few different sectors.
Yeah.
And it looks like investor sentiment is starting to shift to be a little bit more optimistic on China's economic potential.
That makes sense.
Yeah. But here's where things get kind of interesting is that the bond ETFs are telling kind of a different story.
Oh, really? How so?
Well, the Treasury bond ETF is up, a pretty respectable 10.3% over 120 days.
Okay.
But the 10-year Treasury bond is lagging behind quite a bit at just 2.1%.
Interesting. So why do you think we're seeing this discrepancy between those two types of bonds?
Yeah. Remember that different bonds have different maturities, right?
Right. They cover different time frames.
Exactly. So they come with different levels of risk.
Sure.
So that strong performance of the Treasury bond ETF might suggest that investors are confident about China's economic prospects in like the short term.
Okay.
But the 10-year bond is a little more subdued, so maybe they're a little hesitant about the long-term outlook.
So a bit of a wait-and-see approach for now.
Exactly.
Sure, makes sense.
And it's also interesting to compare this with what's happening in the U.S. bond market.
And how does that look?
Our data from Global Market Dashboard is showing that there's some volatility there too, which kind of reflects, you know, those global economic jitters that we always hear about.
Right, yeah.
But the difference between how the U.S. bonds are reacting and how the Chinese bonds are reacting is definitely something to pay attention to.
For sure. An interesting contrast.
Yeah, for sure. Okay, so we've got some mixed signals coming from the bonds in China.
Yeah.
But overall, there's a lot of positive momentum.
Mm-hmm.
So let's shift gears completely and talk about commodities.
Well, boy, commodities.
Just talk about a roller coaster.
Yeah.
What's going on there? The volatility is just crazy right now. Mm-hmm. Prices are swinging wildly.
Yeah. Why do you think that is?
Well, it seems to be like a mix of supply chain issues, you know, geopolitical events, and just like constantly shifting demand.
So a lot of uncertainty in the markets right now.
Yeah, and the numbers really kind of highlight this. You look at lithium carbonate, which is so important for batteries.
Right, of course.
It's got a volatility rating of 10.7.
Wow.
And then soda ash, which is essential for glass making and a bunch of other industries, is at 5.4.
So those are some pretty big swings.
Yeah, definitely some white knuckle stats there.
Absolutely.
But amidst all this chaos, there are some clear winners and losers emerging.
Oh, interesting. So who are the winners in this scenario?
Well, palm oil, for example, has surged by 21.6% over the last 120 days.
Wow. That's significant.
And rubber is also doing really well. It's up 12.5%.
Okay.
But then on the flip side, you've got materials like glass and rebar.
Uh-huh.
They've taken a hit. They're both down over 9% in the same period.
So some pretty big disparities there.
Yeah. So, you know, looking at all of this, it's like, how do you even try to make sense of the global market right now?
It's a jungle out there.
Yeah, it really is.
But that's what makes it so fascinating, right?
It does.
I mean, these fluctuations really underscore just how interconnected global markets are.
Yeah.
And it really highlights the need to kind of stay informed and stay on top of the factors that are driving these changes.
Absolutely. So, for example, let's take palm oil.
Yeah.
It's on the rise right now. And that could be linked to increased demand for biofuel production.
That makes sense.
But then, the dip in glass that we saw could reflect like a slowdown in construction.
Right. So every data point is telling a story.
Exactly, if you know how to listen to it.
I like that.
Okay, so are you ready for the grand finale? Cryptocurrency.
All right, let's talk crypto.
And get ready because some of these gains are
Out of this world.
Yeah, out of this world.
I bet.
The crypto market is living up to that whole Wild West reputation. Just look at XRP USD. It's skyrocketed 217.4% over the last 120 days.
Wow.
And EOS USD isn't that far behind with a 143.1% surge.
So you're telling me I should have bought more crypto?
Right.
Yeah, hindsight is 2020, as they say.
Exactly. But before we all, run out and buy Bitcoin, let's not forget about the one thing that is always constant in crypto.
Which is?
Volatility.
Right, of course.
What goes up can come crashing down just as fast.
Gotta be careful.
Absolutely. And also keep in mind that not all cryptocurrencies are created equal.
Oh, that's a good point.
Yeah. So, you've got those high flyers like the ones that we just talked about.
Right.
And then you contrast that with something like USDT USD, which is designed to be a stable coin.
Uh-huh.
So it's pegged to the US dollar.
Makes sense.
And it serves a totally different purpose in the crypto world. It's supposed to be like a less volatile option for transactions and hedging.
So it's good to have a mix of both in your portfolio.
Yeah.
If you're into crypto, that is...
Yeah, for sure. Okay, so crypto requires a careful approach, a diversified portfolio, and probably a really strong stomach.
Yeah, absolutely.
All right, so now let's bring our focus back to something a little bit more familiar. The U.S. market.
Okay, back to home turf.
Global Market Dashboard gave us some insights into the S&P 500, the NASDAQ, the Dow Jones, all the big players.
And what's the story there? What are they telling us?
What's happening?
Yeah. Well, let's see.
It seems like the U.S. market is humming along. There's some cautious optimism there.
Okay, that's good to hear.
We're seeing solid gains across all the major indices.
Like how much are we talking?
So the S&P 500 is up 6.5%.
Okay.
The NASDAQ is up 6.7%. And the Dow Jones is up 6.5%.
All right.
And this is all over the past 60 days.
Okay, so that sounds like
Pretty healthy.
pretty healthy.
Sustainable growth.
That is good.
Yeah.
But I did notice some things about the volatility indicator.
Uh-oh, like what?
The VIX.
The VIX.
It always makes me a little nervous.
The fear index, right?
Yeah. Measuring those market expectations of future volatility.
Exactly.
Yeah. But, I mean, it's been fluctuating, but the levels we're seeing now
Aren't too crazy.
Yeah, they're not screaming panic. It's
There aren't.
more like a healthy awareness. Investors are proceeding with caution, but they're not like...
Running for the hills.
Yeah, exactly.
So a good balance then
Yeah, I think so.
of confidence and caution.
Yeah.
Now, this data also looks at sector performance.
Okay.
Anything interesting happening there?
Well, one trend that's pretty noticeable is the strong performance of the technology and consumer discretionary sectors.
What does that tell us?
Well, they're often seen as indicators of economic growth and innovation.
So their gains suggest that people still have faith in the tech industry to drive future earnings.
Yeah, pretty much.
And what about the financial sector? It looks like it's doing pretty well too.
Yeah, it is.
So does that point to stability in the banking system?
I mean, I think it's a reasonable conclusion. The financial sector's health is definitely very important for overall economic stability.
Yeah, for sure.
So it's positive performance. It suggests that investors see strength in the banking system and that continued access to capital for businesses.
Okay, but wait, didn't we see some potential warning signs in the bond market earlier?
We did.
Does that contradict this optimistic outlook we're seeing?
Not necessarily, because remember, the bond market and the stock market, they often react to different factors
Oh, yeah,
and on different timelines.
right.
So while bond yields might reflect concerns about inflation or interest rates, the stock market might be more focused on corporate earnings and growth prospects.
So it's all about looking at the whole picture,
Exactly.
not getting too focused on one single thing.
Right. And that's where critical thinking is so important. It's not just about seeing the numbers, it's about understanding the context and making those connections between seemingly different trends.
Right. Okay, so we've talked about the U.S. market.
Uh-huh.
What about zooming out even further?
Oh, right.
What's happening globally? What does Global Market Dashboard say about Canada, Europe, Japan, other key regions?
Well, it's a bit of a mixed bag. globally.
How so?
So some regions like Canada and Singapore, they're showing healthy growth.
Okay.
But then you have places like Europe. They're facing some headwinds from economic slowdowns and geopolitical uncertainties.
Right. And I also noticed that some emerging markets are showing some pretty big losses.
Yeah.
Brazil and Turkey.
Yeah.
What's going on there?
Well, emerging markets are often just more susceptible to global economic shocks.
In what way?
Well, things like currency fluctuations, political instability, commodity price swings can have a big impact.
Okay.
So the losses that we're seeing in some of those emerging markets, they kind of reflect those vulnerabilities.
So it seems like, there's a lot of good news in the U.S. and even China.
Yeah.
But when you look at the whole world, it gets a bit more complicated.
Yeah, for sure. It's more complex, and it highlights the importance of diversification. Spreading your investments across different regions and asset classes. It helps mitigate that risk.
Okay, so we've covered stocks, bonds, commodities, crypto. We got a glimpse of what's happening globally.
It's a lot to take in.
Is there anything else that stands out to you from this global market dashboard data?
Well, one thing that caught my eye was the performance of currency markets.
Okay. And what's happening there?
Well, we're seeing that the US dollar is strengthening against a lot of major currencies like the euro and the Japanese yen.
And for the average person, does a strong dollar affect us in any way beyond exchange rates when we're traveling?
It does. A strong dollar, it has both upsides and downsides.
Like what?
Well, for U.S. consumers, it can mean cheaper imported goods.
Oh.
And maybe more affordable travel abroad.
That's good.
But it can also hurt U.S. exporters because their products become more expensive for buyers in other countries.
So like most things in economics, there's always a trade-off.
Yeah, there's always a flip side to consider. It's really important to think about these global market trends from different angles and, understand how they might affect your financial decisions or your areas of interest.
Right. This deep dive has been quite a journey.
It has been a whirlwind.
Through all this market data.
Soaring highs, worrisome lows.
Everything in between.
It's really fascinating to see the forces that are shaping the global economy.
Yeah.
It's a good reminder that markets are dynamic.
They are.
They're influenced by a lot of complex factors, and it's impossible to predict them fully.
Yeah. It really is amazing how much information you can get from just looking at one day's worth of market data.
It's a lot to process.
It is. It's a lot, but that's kind of why we do these deep dives, right?
Right. Break it down.
Yeah. Try to help you navigate this crazy financial world.
Exactly. Make it a little less intimidating.
Exactly. All right. So before we wrap up, let's do a super quick recap of some of the, maybe most surprising things that we talked about today.
A highlights reel.
Yeah. For me, that surge in the Chinese market was just crazy.
Yeah. Especially those ETFs, right?
Yeah. It really makes you wonder if things are shifting.
Yeah. Is China taking a more prominent role?
Yeah.
On the world stage?
And another thing that really stood out to me was the volatility in the commodity market.
Oh, yeah, for sure. It's a reminder that even small disruptions can have huge consequences.
Yeah, exactly like we were talking about with palm oil.
The ripple effect.
Yeah. And speaking of surprises, those gains in cryptocurrencies.
Oh, yeah, those are wild.
XRP and EOS.
Makes you want to jump back in.
It does, but it also makes you realize whoa, you need to be careful.
Right. Understand the risks.
Totally. So as we're looking ahead to the coming months, what's the one big question that our listeners should be asking themselves?
Good question. I think given all these market trends, they should be asking themselves, what opportunities or potential risks should I be paying attention to? Yeah. Are there certain sectors, certain regions or asset classes that really align with my goals?
And my risk tolerance?
Exactly how might these global trends that we talked about affect my own personal financial decisions or even my career path?
That is a great question. And remember, this deep dive is just the beginning.
The jumping off point.
Yeah. It's up to you to go out there, do your research, stay informed, and make the most of this knowledge.
Knowledge is power, right?
Exactly. Thanks for joining us today on this exploration of global market trends.
That's been a fun one.
It has. Until next time.